Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market update. Hope everybody had a beautiful weekend. And I just want to start off, guys, by asking you, how are we feeling about these markets? Are we bullish? Are we bearish? How are we feeling today, guys? Well, let me just give you my impressions. After the past 2 weeks of earnings, we have really heard nothing but good things. Big tech continues to do what big tech does best, generating a ton of cash and reinvesting it into AI, which will bring them larger productivity down the line. We also had major earnings from our banks. The banks also commenting that the state of the economy is healthy. And for the most part, all of your consumer exposed stocks that have been reporting as of the last week are also reporting very healthily. So as a whole, guys, seems as though still no signs of recession on the table. And that is what we've maintained on the channel for the better part of the last 6 to 9 months. Even though inflation has been slightly trending to the upside, it is just a little bit of a blip before continuing to downtrend. Rate cuts will be coming into effect later on in the year and a lot more into 2025. And I just really don't see much of anything that can derail this economy right now. Do we have temporary issues to deal with, such as Israel and Iran right now? Yes, but those are temporary headlines as well. Is it going to escalate into a worldwide conflict? I really don't think so. 99% sure, as a matter of fact, that it will not. So all in all, everything's good. The economy's good. The jobs market is still good. Yes, inflation is slightly uptrending, but it is seasonal factors. I do expect that to be coming down in the near-term future. And most of all the companies that have reported so far have reported beautiful earnings. So all in all, guys, the context of this market is still extremely bullish. We are in a bull market. Take a look at your monthly timeframes across the SPY, across the QQQs. We are in clear net monthly uptrends, guys. So let's just keep it going. Let's buy the companies that you love the most at considerable dips, and let's absolutely smash this bull market, and let's get that money, baby. So let's get into it, guys. Quick little intro just to lift everybody's spirits, right? In case you are kind of on the line, on the fence, a bit nervous about these markets, really nothing to be long-term nervous about as of right now. So in today's news, guys, did we have any macro data? Well, not really. We did have some news from Tesla, though, that caused the stock to go up 15%. We'll take a look at that later on in the video. We also have some earnings from SOFI that we're going to take a couple minutes to look at and see how that company is shaping up, as it's been a company that I've been getting more and more keen on looking into because its financial metrics have been improving. So then after we take a look at SOFI earnings, we're going to go through our major technical analysis rundown, major stock market indexes, and then our major big tech names. And to wrap things up, we'll take a look at my portfolio and show you guys the trades that I have made for today and for tomorrow morning as well. So without further ado, guys, let's get right into it. So SPY up a healthy 0.35%, QQQ up 0.41%, fairly broad market participation across the board today. In terms of the heat map, you can see that expressed even better where the bottom half of the market was responsible for most of your gains. Healthcare had a very good day. Energy, real estate, industrials, consumer cyclicals, Amazon, Tesla, both coming up as well. Really nice gains across the boards. Where you were lagging? Well, a few of your major tech names that last week committed to reinvesting a lot of their free cash flow into excess AI endeavors, meaning that they're spending more and more money on building out their AI networks. So think them spending a ton of more money to this company right here, NVIDIA, and the rest of the semiconductor industry as a whole. So those slightly pulling back, guys, and the common theme, really, Meta, Google, and Microsoft, those are the three companies that said last week were increasing their capital expenditure, right? So coming a little bit down after their earnings, but still very healthy pullbacks, in my opinion. Apple having a beautiful day as well. So all in all, guys, fairly healthy day on the market, decent market rotation. 1 day relative performance, you can see that even better. Most of all your major sectors in the green. The only two that lagged behind, well, financials a tiny little bit, and communication services. Communication services obviously led by Google and Meta, so that's why they were down the most on the day. All in all, guys, very, very healthy. So before we do our technical analysis rundown, let's take a brief look into SOFI stock, because you guys know that I took a position on this one last Friday. So let's see how that went out. So SOFI stock on the day down 10.5%. But did they have a bad earnings? No, actually, they actually crushed it. I was very happy with the earnings. EPS, they put in an EPS of 2 cents per share. They were expected to put in 0.007 cents per share. So a significant beat on EPS and a decent little beat on revenue here as well, 4.53%. Where they came down from, guys, was a slight little negative guidance element for the Q2 that's coming up. Revenues are going to be a little bit softer than expected, but they reiterated positive guidance for the entire year. So a little bit of a slowdown in Q2, but Q3 and Q4 should be beautiful for this this company. I'll remind you, what is the story that we're going for on SoFi right now? So as you can see, this bottom right chart right here, you can see that SoFi, although they were growing revenue healthily over the past couple of years, they were just not profitable. Look at these net margins, negative net margins. And oops, what happened last quarter? Finally became positive net margin for the first time in the company's history, and that will continue over the course of the next couple of years. Look at 2024 EPS, 2025, 2026, healthy positive EPS. SoFi finally turning that corner to profitability and really starting to ramp up the revenue curve. This is where I start to get interested in companies specifically that have been beaten down, that are growing fast but still negative. When they turn the corner to positive net margins, that's when I start to want to build positions. In terms of the company's financial health, really nothing bad to say about it either, right? In terms of debt, about $5 billion worth of debt. In terms of cash and cash equivalents, about $3.5 billion. So now they're largely starting to pile on that cash to service this amount of debt. So the company's financial position is quite good. In terms of our technicals, we are sitting above our current big area of support right now, which is $7 all the way down to about $6.50, this green box right here. And that's been support for the company largely pretty much since smashing through it back in June. So almost a year's worth of support down here at current valuations at $7, guys. Well, we can't really do forward EPS analysis just yet because it isn't consistent enough. But what we can use is a common metric that we use for growth stocks that are barely profitable or just turning profitable, which is price to sales. And price to sales ratio for the company is quite good. They have a market cap of about $7.44 billion. And last year they brought in almost, let's call it $3 billion in revenue, right? So if you just want to take that quick division, right, 7.44 divided by their 2.9 in revenue, that's about a 2.5 price to sales ratio, which for a growth company is very, very fair. The company's valuation down here is quite fair. So that's why I really like this company in this position. Now let's take a look at the headlines. We're going to go over these very, very briefly, guys. So SoFi stock is dropping after earnings. A transitional year lies ahead. That's something that a lot of fintech stocks have been saying as well. PayPal said that as well. Square said that as well. So no secret there. Now let's take a look at the article. For its second quarter, SoFi sees adjusted net revenue of $555 million to $565. So the midpoint there is about $560 million. Analysts had penciled in $581 million. So they missed by about 4% on Q2 guidance. That is the reason for the stock dropping. For the full year, however, here's the good part of the guidance. The company now forecasts adjusted net revenue of about $2.4 billion, higher than the range of 2.365 to 2.4. So increasing their total year guidance really came in counterbalance their negative Q2 guidance, in my opinion. It also forecasts EPS of 8 to 9 cents above the previous guidance for 7 to 8 cents on the year. So nice little bump on EPS. So although Q2 is a little bit lackluster in terms of the guidance, a little bit of a revenue decline, right? Well, not decline, just growing less fast than analysts anticipated. We do have a full year guidance meet of expectations and full year EPS, which raised expectations. So very good for the company. Now let's take a look at what the CEO had to say. 2024 remains a transitional year for SoFi as the tech platform and financial services segment together are expected to drive growth and increase from 38% of total revenue to 50% for full year of 2024. So this is basically a fancy way of saying, listen, SoFi before used to be a lending platform. They would issue loans, namely a lot of student loans. But since that, they've wanted to pivot their company and broaden their offerings. So now they have a brokerage division where you can buy stocks. You can also buy crypto in there. And they also have a tech platform as well, right? Which is going to enable small businesses a bit in the same way that Square and a bit of the way that PayPal does it as well, right? So they're really trying to broaden their offering, which is exactly what we want to see. So now we can see that the loan segment of the company is representing less and less of total revenue as the other segments really come into that growth metric. SoFi began as a lender focused on refinancing debt, but now operates through three segments, as I just said. Lending, which includes student, personal, and home loans. Financial services, which is their brokerage services to buy stocks and whatnot. And a technology platform. Think savings accounts, right? Think tools for small businesses to grow as well. Very, very good for them. Now, origination volume within the lending segment rose 22%. So their largest segment was growing 22%. The lending segment used to be the star of the show, but the financial services and tech platform have been making strides this quarter. Revenue for those segments grew 54%. That is absolutely amazing, guys. And now Total deposits also grew by $3 billion in the quarter. So total deposits on the upside. SoFi added nearly 22,000 new customers and now has more than 8.1 million customers. So everything's good for the company, guys, right? Their total deposits are going up. Their customers are going up. All three of their lines of business, right? Lending, financial services, and their tech platform is also on the rise. So really nothing bad with the company, and it's turning profitable. So very, very good report by SoFi, despite the percentage decline on the day. If anything, in my humble opinion, this is going to be a buying opportunity for me to be able to load up on even more shares. So looking good nonetheless for SoFi. So that is pretty much everything for your earnings, guys. We're going to be doing these earnings as of now in a more abridged version. So last earnings quarter, last earnings cycle, right? I spent a lot of time publicly going through financial statements on the channel. And although that's good, I just don't think that it's the right place to do it in the middle of our daily market recap. So if ever we do have, a lot of requests for me to go through financial statements and do video specific topics on earnings, let's say if you want me to do a full breakdown on Amazon earnings, like 10, 15 minutes, break down the balance sheet, break down everything, right? That is what I'll be doing moving forward. But I can do those videos moving forward. But as of now, in these daily market recaps, I'll probably just do about 3-4 minutes on each important company of the day. And that'll pretty much be it, just to give you guys a quick glimpse into what the company did and my thoughts on the company moving forward. So hopefully that is sufficient to all you guys as I continue to navigate the space as a creator and try to optimize my videos really to please the most amount of people at the same time, right? So all that out of the way, guys, let's get into our technical analysis rundown right away. So in terms of SPY up 0.35%. What were we looking for on SPY? Well, we knew this, guys. We were in a daily downtrend. We were looking for the size of the bounce. We got a juicy bounce, and then it was up to the bulls to reset the daily uptrend, which they did. So now we are in this context of a daily uptrend, continued movement on the day today. You can barely see that candle. My apologies. Now you might be able to see it a little bit better. And now we are finally starting to break above our little area of previous support, which was now resistance. And we're also right above our moving averages too. So looking very good as a whole. You guys can probably barely see this candle. My apologies, but it's right here. There is a candle there, right? So in terms of that, looking very healthy, guys. Daily uptrend continues. And this week will be pretty much predicated on the success of two factors. Having a good Federal Reserve meeting with Jerome Powell, and also having good big tech earnings. Amazon, AMD, Supermicro, and Apple are going to be some of the ones to keep a close watch on for this week. But all in all, bulls very, very healthy, daily uptrend underway. So as soon as this move tops out, just going to be looking for a daily higher low for further trend continuation. As long as we are in this daily uptrend, guys, your weekly bounce continues. And take a look at the size of this weekly bounce right now. It's getting pretty juicy. We're all the way past 50% bounce. If we can get up to about 513, that would be the 618 mark. And then if the bulls choose to take a little bit of a breather, they will have enough space to set maybe the weekly higher low and change this back into a new weekly uptrend. So all in all, SPY looking very, very good as a whole, guys. No real red flags right now. If you want to know when this daily move is topping out, as I remind you all the time, just keep an eye on your hourly trend. When we lose the hourly trend, that is when your daily move tops out, and then we'll be looking to set the higher low for the potential trend change. So all in all, looking very good on the SPY. Now moving on to QQQ. QQQ, same thing as the SPY. So now new daily uptrend is set. We're down back above our moving averages, which were previous resistance. So all of those things are good. So this daily uptrend translates into our weekly bounce, and we need to measure the size of the weekly bounce because on QQQ, we were in a weekly downtrend. So we need to reverse this weekly downtrend. Well, have the bulls put in enough space? Let's take a look. Yes, as a matter of fact, they have. They are almost up to the 618 level, guys. That would be 435. If we can get back up to 435, either in tomorrow's session, it'll give the bulls a ton of space that even if earnings are, let's say, underwhelming this week, well, we could be able to set a weekly higher low and then potentially recapture this uptrend in the month of May. So all in all, the bulls have put in a very good amount of work. So it remains to be seen if they can hold through this week with Jerome Powell and with the rest of your big tech earnings. It's going to be looking really good for continuation and start clawing back at these all-time highs that we lost over the month of April. Now moving on to XLF Financials. XLF Financials also not looking too bad. Daily downtrend, very healthy bounce. I'll remind you the size of the bounce was the most healthy on XLF of any other index as a whole. The bounce size was almost up to 75%. Very, very good bounce size. and it sets up the bulls perfectly to do what they're trying to do right now, setting the daily higher low and reverse this into a new daily uptrend. So this move here is just looking for a daily higher low. The bulls playing great defense in this area right now above your moving averages. What we need to see on XLF now, need to see that hourly trend change. If we can get an hourly trend change into tomorrow, your daily higher lows will be set, and we'll just be looking to then break last Tuesday's high for that first daily uptrend ever since losing it all the way back here. On the weekly, everything is looking very good as well. Weekly uptrend, got the weekly higher low. Now it's time for the bulls to put in a bit more of a move here. If for whatever which reason we top out, let's say this daily uptrend, right? This daily uptrend tops out here, and then we kind of reverse down like that. We'll just be looking for the weekly higher low for a new weekly uptrend to be set if ever the bulls can't V-shape this directly. All in all, guys, looking very good. No signs of any red flags just yet. Now, lastly, our healthcare sector. Healthcare had a decent day today, 0.34% to the upside. Looking fairly good on healthcare, right? What were we looking for? Same thing as the other indexes. Daily downtrend. And now the bulls engulfed our most recent leg of selling, engulfing move. Now we're going to be looking for that reset of the daily uptrend. So daily higher low is now set. That you can notice by them changing back to an hourly uptrend. So if we can continue this hourly uptrend into tomorrow, we're going to be looking for them to break this high right here, last Tuesday's high, 141.58. We would get back the daily uptrend that we lost in this section right here. And once we have our daily uptrend, our weekly move will now be underway. And then similar to the rest, we need to measure the size of the bounce on the weekly, get me at least up to 143, as best as 144.50. And then we can talk about the potential reversal of the healthcare sector back into a weekly uptrend of its own, rejecting nicely now from our area of support, previous all-time highs, resistance, and now using it as support. So all in all, guys, looking very good for the bulls. It's really a case in point to a broad market recovery right now. It's not QQQ only leading the way. It's not only XLF leading the way. It's not only healthcare. It's really everything taking turns and rotating very nicely. Now moving on to SMH. So semiconductors looking very, very good, if I do say so myself. We had, same thing as the rest of your indexes, daily downtrend started. It was up to the bulls to put in a nice sized bounce, which they did. I'll give them that. They put in a bounce roughly about to the 50% range before coming back, setting the daily higher low last Thursday, and now new daily uptrend for semiconductors. In that process, we're also now back above key areas. Number one, all of your moving averages. Number two, this key area of weekly support, right? This whole 216 down to about 212. Back above that now as well. I'll remind you that was a key level to protect because it was your weekly lows. Well, we did set the weekly downtrend, and now the bulls in this pretty much straight shot move since the midpoint last week. Look how much of this weekly move the bulls have taken back already, right? 61% of the move. So it's a very nice move to the upside. The bulls have created a lot of space. Let's say for any which reason, AMD earnings, super micro earnings, all of your semiconductor earnings that come out this week, let's say that they're bad. Well, that in that case, we may see a little bit of dip like this. That would give our bulls a chance to set weekly higher lows potentially into next week as well and reset this into a weekly uptrend. All in all, looking very good. I'm very pleased with the size of this recapture by the bulls. Now just remains to be seen how high can they make this daily uptrend go. Obviously, the best case scenario would be bringing it right into your 230, engulfing this entire weekly move down, and then it'll really be looking good, guys, for your monthly higher low being set and moving on to further trend expansion in the month of May and June. Now moving on to IWM Russell. So IWM Russell also performing decently on the day, 0.81% to the upside, looking fairly good. New daily uptrend after being stuck in this gorgeous daily downtrend. I know it's not gorgeous because most people are long and we lose money, right? But it was a very nice attempt by the bears down here, right? And now the bulls have completely engulfed this move as well. Right, so we've almost but all engulfed your previous leg of selling on this on this bounce, right, getting up to about 70% of the move, maybe 65. So not a fully engulfing move, but still decent momentum to the upside. Gave them the space, set the daily higher low, new daily uptrend. So now that we have our daily uptrend, your weekly move higher is underway, and we must once again measure the size of this weekly move because we were in a weekly uptrend. We then lost that weekly uptrend right here by losing these lows. Now we need to measure. I would be very hard pressed to believe that the bulls can V-shape such a big move by the bears. The most likely scenario, in my opinion, guys, will be we have to get a retracement size up to at least 203.64. Give me that 618 fib level, and that will create enough space, guys, for the bulls to then reset this on the weekly into a potential new weekly uptrend. Need to also get back above this red box right now, which was previous support, previous resistance for a very long time. Need to mount above that to be able to break and close above and start attacking your 212 level again. So IWM Russell putting in some decent work. I'm not going to lie, it is putting in some decent work, but I really truly think that this sector will only fly with the rest of the risk on trade. And usually for the risk on trade to start flying to the upside, we need certainty surrounding the timing and the amount of rate cuts. Only when we have more certainty around that will market makers, institutions, and retail alike feel the need to go for a more risk on trade. If you've noticed in the past few months, guys, yes, a lot of stocks have been going up, but the ones that have performed the ones that have performed the best have been your most solid companies out of the entire markets, right? So think of big tech, right? If you want to take a look at your year-to-date performance, let's take a look at year-to-date performance on the S&P. You can see that most, if not all of your gains, right? Solid gains from your banks, solid gains from a few of your healthcare companies, right? Industrial sector, a few nice gains here, and big tech. Largely, though, the risk on trade in terms of small cap stocks is just not here yet in full swing. Now, moving on to the Dow Jones, give me a quick second. All right, so moving on to the Dow Jones now. Dow Jones looking very healthy, guys, 0.38% to the upside. Dow Jones putting in some work. We're almost to the level that I want us to be at, right? So extended daily downtrend. We were looking for the bulls to put in a decent sized move, which they did. We measured this last week. They got up about 618%. That's exactly what we want to see. Sets up the bulls to create the space for the daily higher low and the daily trend change. So if they break last Wednesday's high right here at about 38,550, we will be in a new daily uptrend. The first daily uptrend since pretty much the end of the month of March. Looking very good. If we do get that daily uptrend, well, then we'll be once again measuring the size of the bounce on the weekly because it was a weekly uptrend that we lost. It's not a weekly downtrend. Downtrend would be something like this. That is still on the table. I am expecting a lower high. Now, depending, where is that lower high going to be? Is it here, right? Is it right here before we roll over? That would be a loss of the hourly trend before, and that would be the end of your daily bounce. And then we'd be looking to the lows. Can they protect the lows or set the daily downtrend? But if we can get back above this level, get back above these moving averages, back above this yellow line of resistance right now, it's going to look very good. And then we can potentially pull up high enough to give the bulls a chance at resetting for the two-step weekly trend change back to the bulls. All in all, looking very good. The Dow Jones, guys, will be heavily reliant on the performance of these following companies that are in them. Think McDonald's, Coca-Cola, right? Amazon, which is now the Dow Jones, and Apple. Those are going to be the largest, and MasterCard as well. Those are going to be some very large contributors to your index this week. And if they perform well, I do expect the Dow Jones to recapture this daily uptrend and really start making moves to recapture this weekly as well down the line. Now, let's move into our big tech names, shall we? So moving on to Apple. Apple with earnings on Thursday, so the price action should be fairly muted. That being said, they had a gorgeous day today. Apple is doing exactly what I said I wanted it to do before earnings, which is creating enough space off these lows that if ever earnings are bad for Apple, keep in mind, right? A lot of talk about Apple recently missing their Q1 iPhone sales by about 10%, which is a large number for Apple. It is their largest division, right? So that could translate into missed revenue. But I do think that Apple will do a great job at maintaining profits, however, but you could see a miss on top line revenue. So that being said, we have now created a ton of space off the lows, guys. We've created about 5.5%. So it does create us a very good cushion. I'll remind you, the last time Apple missed earnings in a big way was back here August of 2023. And that day, Apple only fell about 5%. So that's the extent that Apple usually moves on a bad earnings, 4-5% to the downside. And if we can maintain these levels right here, 174, that would really be the cushion that we need to not flush these lows right here. So keeping a close eye on that. Size of this bounce is really juicy right now, guys, right? Take a look at the size of this bounce. 78-80% to the upside, sets the bulls up perfectly to set the daily higher low for the daily trend change. But of course, guys, we have earnings. So even if Apple does something like this and starts curling before earnings, let's say Tuesday is red, then Wednesday's green and it starts curling, and then Thursday in the afternoon is green. Well, if Apple earnings are bad, we may just get sent down. That's why I don't want to give too many expectations as to trend changers or whatnot before much of the time of earnings. But I do really like Apple stock, and if for ever which reason after earnings we revisit the lower 160 range, it'll be a tremendous buying opportunity for all bulls, guys. I'll remind you, Apple is just still consolidating in this tight monthly range right now. It does that a lot, where it just tightens up for a few months as it kind of grows into its new valuation and then just resumes the trend as one of the most solid stocks in the market. So looking very good on Apple. I'm very pleased with how well the bulls defended this lower 170, 165 area pretty much over the past 2 months. So earnings will be on deck, and I will be playing earnings. More about that coming on the Wednesday video. Moving on to AMD right now. So AMD as well, fairly muted price action, guys. They have earnings tomorrow, right? So it serves no purpose for me to say, daily uptrend is underway and stuff like that. Because if earnings are bad, we're just going to get sent down to these lows. And if earnings are good, well, the daily uptrend will continue beyond, right? That being said, the bulls have created some decent space off these lows, right? From current market price to the lows of pretty much our lowest lows that we got about 2 weeks ago, right? That's about 9%. Let's take a look at AMD's expected move for tomorrow, right? So their expected move after earnings is about 8%. So we have created enough space that we can secure this zone potentially, right? You also have your 200-day moving average down there at about 145. Decent area of support. And I'll remind you, this area of support was coming in from pretty much the early portion of January. So looking good, daily uptrend underway. In my opinion, guys, AMD, well, as that expected move said, right? 8% up, 8% down. If earnings are bad, we're going to come down and revisit our lows, 144, 140. At that point, I do think it does represent a decent buying opportunity for AMD. Look, this whole region right here, guys, right, this whole 130 where we left off from to about the 145 level, this whole area right here, in my opinion, is where the sell-off for AMD will stop, just because that is the most likely area for your monthly higher low that the bulls are trying to set right now. Your 12 EMA is right there as well. So that would be a juicy opportunity if it ever does happen. So not looking too bad on AMD, but since they have earnings tomorrow, very difficult to set price target expectations. If they beat to the upside, guys, well, to the upside, we do have this one big area of resistance, right? That whole 180, 183 level right here. That's going to be tough for the bulls to get above in one clean shot. If we maintain these levels tomorrow, that would be about 13% to the upside. So it remains to see what AMD will do tomorrow, and we will definitely be analyzing the stock after earnings to derive potential trade opportunities. Now moving on to Amazon. Amazon doing fairly well today, 0.75% to the upside, really doing a great job of recapturing the dip that we had last week after the Meta earnings event. So it was a daily downtrend. The bulls have now engulfed 100% of the move, and any move lower is just going to be for a higher low for further trend continuation to the bulls. However, similar to AMD, guys, all of that is great in theory, but they have earnings tomorrow. Now, if you ask me my gut feeling, well, it's not really gut feeling, right? It's all the work that I've put into analyzing Amazon stock and what they're trying to do this year in terms of increasing free cash flow, increasing profitability, and cutting down on capital expenditures, as they did most of those back 2-3 years ago when interest rates were cheap. I think Amazon is absolutely going to crush it. Now, whether Wall Street responds well to that, as it did with Google and Microsoft, or if it responds poorly to one little lined items in their guidance to the downside, like happened in the case of Netflix and Meta, that is anybody's guess. But I do think they will absolutely crush their financial metrics for this quarter. What happens to the price action of the stock afterwards is obviously anybody's guess. That being said, we have created some nice space between now and the lows. That's about 8% to the downside. To the worst, what can possibly happen with Amazon? Well, let's do it right now together, right? You guys want to know the expected move for tomorrow? Let's take a look at that. The expected move for tomorrow, guys, is about 7.5% to the downside, max low of 167. So let's give ourselves a little bit of margin of error. Let's call it 10% maximum to the downside, right? So 10%, where would that put Amazon to the downside? Well, looky here. It would put us exactly into the area that I want to buy, which is literally the 160 level, the gap fill from the previous earnings. That would be a tremendous buying opportunity, and I'll be going shopping, guys, for leap call options if ever that does happen. I already have some in the account right now, but we will be going for a considerable amount more, just to say that. And obviously, if they crush it to the upside, Well, the bulls will recapture absolutely everything. All-time highs will be in motion. Weekly will be well in motion as well. Weekly uptrend just continues at that point as if nothing happened. Such an amazing company. So those are the two types of scenarios I'm looking for on Amazon's earnings tomorrow. Now moving on to Google. So Google looking very good, 3.33% to the downside. The reason I say it's looking very good, even though it was a red day, guys, is because the red is really not because of anything wrong with the company, right? Not as if they came out with any negative news today. It's just a very healthy pullback after earnings. So daily uptrend now clearly back in motion to the bulls, just looking for a daily higher low for further trend change. Now, one thing that you can do if ever we're looking for this sell-off to continue, right? Just monitor when we regain the hourly trend change. When we recapture the hourly trend, your daily sell-off is pretty much concluded, and we will be looking for another bull leg up. Looking very good on Google stock. Not much in the terms of, overhead resistance, right? Because we are pretty much beyond the all-time highs. You really have to think of psychological numbers at this point, right? For the continuation off of this potential daily move, 180, 200, those are potential levels coming up. If for whatever reason Google takes back too much of this move and comes back and taps our previous all-time highs of around 160, 150, just going to be a really nice breakout retest opportunity for future gains, in my opinion. Nothing wrong with Google stock. Take a look at this weekly uptrend, guys. Fantastic weekly uptrend. So any pullback just going to be for a weekly higher low for further trend continuation. Google looking extremely healthy. If anything, guys, right, represents a decent little swing trade opportunity to write some short puts around the 161, 160. I don't believe that the bears are going to be able to do something like this. Google's earnings were absolutely amazing. They're doing so many buybacks now at this point, guys, that they will support the stock's price. Now moving on to Meta. Meta down another 2.41%, guys. And I just don't buy it. So when you guys are going to see my trading account, I did make another play on Meta for this week, guys. I just don't buy this drop. If you want to ask my honest opinion, guys, this company had such amazing earnings. For them to get hit to the downside because of more capital expenditures to AI, right? And it's not as if they're spending most of the money in their metaverse projects. No, they're deploying a lot of that capital to improving their advertising algorithms and augment them with AI to better customer needs. And that's huge, guys, right? That's their bread and butter of their business. So happy to see them deploy more money into what they do best. So that being said, Meta is still in the context of this daily downtrend at this current point, right? We are now looking for the bulls to maybe give us a new daily uptrend. So the bounce was underway, but obviously the size of this bounce, guys, was fairly weak, right? So what happened is we had a nice bounce underway. We trying to set the hourly uptrend, and now unfortunately we lost it, right? So now it'll be up to the bulls to save these lows for 14. If we can put in a higher low, it could give the bulls a chance to reset this daily uptrend and start recapturing some of this gap, right? As of now, that's what we're looking for. If ever the bulls fail and we lose this level right here, 414, well then, daily downtrend will simply continue, and then we'll be targeting the gap fill area around the 400 mark. That's where I do think the damage on Meta could likely stop. We're going to be coming up on some very big levels, previous levels, right? Nice area to be buying the dips, in my opinion, guys, right? Meta stock, the true support below that comes in between 380 and 360, but I don't think we're going to get that much, guys, right? Meta is already down. As of last earnings, it was down 21% last week at its maximum. Last fall, when the markets were falling apart, Meta only came down as much as 16%. Bit of an overreaction to think that it'll get down to 380 to 360. That's a long ways, guys. That's 33%. In this market, I don't really see it for a company with such great fundamentals, guys. I don't really see it happening. So I am eventually looking for when the bulls recapture this daily uptrend potentially, that'll be the start to the weekly bounce. Similar to the rest of our markets and stock names, we will then look for the size of this bounce in relation to our move. I would need to see the bulls get at least up to about 475. If we can get up to 475, give us the best chance at reversing this weekly uptrend. Since now we have lost the weekly uptrend, right? Clear as day, clear weekly uptrend right here. Then you lost these lows. Lost the weekly uptrend, so now we need to recapture it. The V-shape, in my opinion, highly unlikely. The more likely scenario is maybe the two-step process. When you see a big drop like this, you see usually Meta does it in 2 shots to regain that weekly. All in all, looking very good. Now moving on to Microsoft. Microsoft down 1% on the day. Not looking too bad either on Microsoft, right? Just still consolidation after its earnings. Now we've entirely filled the gap after earnings as well. Microsoft is definitely one of those companies that just doesn't like leaving gaps behind in its previous chart history. That being said, it can still happen, but it's just what I've noticed. It doesn't really like leaving gaps behind. Now, if we take a look at Microsoft, right, we were in the context of this daily downtrend, continued daily downtrend. Then the bulls did something last week with earnings, engulfed the move, 100% engulfing move, created the space for the daily higher low for the potential trend change. So what I need to see from Microsoft is respecting this previous level of support right down here, 398. If we can hold this 398, gives us the best chance at attacking these highs. Need a break of the earnings high over the course of this week. That would look very, very pretty, guys. If we can break this with some nice momentum, we may be even able to get above the 415 level. So there's a few trades right here, depending on how you want to play Microsoft. One of them is obviously playing the daily higher low right now and going for the swing trade breakout. Another more conservative way of trading would be for waiting for that breakout to materialize, and then you need your confirmation for entry. So it would look something like this: breakout, retest of this range. The retest trade comes here. This is the long trade, and you're going for all-time highs. Your stop loss would go below this level right here, because then that would invalidate the whole nature of the breakout of this trend back into long form weekly and monthly uptrends, right? So those are the two trades that I may be looking for myself on Microsoft. But all in all, looking very good. Protecting these weekly lows. You can see no weekly close below here. We shot down here temporarily. The bulls got it back. So your weekly trend, although a bit sketchy, is still technically intact right now. Going to be looking, can Microsoft start recapturing some of this damage? So just keep an eye on that daily pattern that I was showing earlier. Now moving on to Netflix. Netflix down 0.31%. Netflix still kind of trapped in its post-earnings lows. So that being said, Netflix currently daily downtrend, clear as day, trying for the double bottom. Now what they need to do, guys, is they need to explode this hourly time frame. So very tight range of accumulation. It tells you that this stock is ready to explode one way or another. I would tend to say bullish just because their earnings, there was nothing bad on their earnings. The reason they dropped 9% was because they said that they were going to stop reporting new subscriber numbers as early as 2025. But that's still a long way away. Their financials themselves were amazing. Their subscriber growth was amazing. Nothing bad in the report whatsoever. So I do have a slight little bias to the bull side. So tomorrow, keep an eye on this level right here, 562 if you're trading Netflix. If you see a break of 562, hourly uptrend is recaptured, and then we may be looking for the daily bull expansion. The daily uptrend would be recaptured if we get a break of 578. Get me back above 578, new daily uptrend is set in motion, and then we'll be looking same thing as other stocks and indexes. How much of this weekly move down can we recapture? And for it to be healthy, I would like to see at least 50%, which would be 592, and all the way up to 600, which would be a 61% retracement. Do that, and the bulls have enough space on the weekly to then sit on this 578 area that is now resistance. It was big resistance in the past. If we can get back above that, use it, and then reset the weekly uptrend. So all in all, Netflix still looking good. If ever we break down similar to, this chart looks eerily like Meta as well, right? If ever these two stocks break down, guys, I'm going shopping for Netflix. 520 down to 500 is going to be my sweet spot for this one specifically. Now moving on to NVIDIA. NVIDIA also not looking too bad. Give me a quick second. Sorry, guys. So give me a quick second about that. And now we are going to look at NVIDIA stock. So NVIDIA looking very, very, very healthy, guys. Daily uptrend is back to the bulls, back above all our moving averages, and back above our very important 850 line that was big support for about a month and a half. We lost it. They used it as resistance, and now we're back above it again. Looking very good, guys. So now that we have our daily uptrend back in motion, as I said last week, the weekly move is now, looking very, very, very healthy, guys. This candle structure right here shows that there's a lot of demand. Usually when you see this candle structure together, some people call it railroad tracks, right? When you have a candle coming down, you get an almost equal candle move to the upside. What that shows is that this area right here is a big area of demand. When the price dips into that area, there's a lot of people that want to pick up the stock, and it just presents a very nice area thereafter that can act as a big support zone if ever we start retesting into those two candles. So NVIDIA looking very good. The weekly uptrend was never in jeopardy at all. We were always looking for a weekly higher low for further trend continuation, and it looks at this point like we're going to get it. We were nervous about the MACD cross, guys, but the MACD can cross to the downside sometimes, and I mentioned this last week as well, or the 2 weeks prior. The MACD can sometimes cross down, which shows negative momentum, but it doesn't mean that the share price has to necessarily fall off a cliff. Take a look, you had a MACD cross back here, and all the stock did was kind of consolidate sideways, right? So that can happen too. Seems as though that's what's happening on NVIDIA, but at least now our weekly RSIs are at much more manageable levels. Everything looking good. As soon as this move is finished, we're just going to be looking for the daily higher low for further trend continuation. Your short-term bulls are back in control now. Your weekly bulls never lost control. And on the monthly, we were always looking for the monthly higher low for further trend continuation. So looking very good on NVIDIA. Now moving on to Tesla. NVIDIA, by the way, will be obviously affected most likely by your earnings from AMD and Supermicro tomorrow. That is for sure. Now moving on to Tesla. Tesla with an amazing day, 15% to the upside. So what happened with Tesla? Well, they had some pretty big news, guys. Tesla stock surges on watershed full self-driving approval in China. Elon Musk had a surprise visit to China over the weekend to discuss implementation of FSD nationwide. That would be huge for the company. As of now, it's still in discussion, but they've made a lot of plans and a lot of concrete partnerships to make that happen. So Tesla stock soared on Monday following reports that CEO Elon Musk won Chinese approval to deploy the automaker's full self-driving on the mainland, talking about China, of course. Tesla will use Chinese tech company Baidu's street-level mapping data to power FSD. Tesla had been previously using Baidu's mapping data for satellite navigation in its cars. Working with a Chinese, this is so key, guys. Working with a Chinese company helped with regulatory approval as data privacy and security risks are minimized. So Tesla is trying to expand FSD into China, and to do that adequately, they have now partnered with Baidu, a Chinese company who is no stranger to satellite data and mapping. As a matter of fact, Baidu is the provider for a lot of other Chinese competitors to Tesla. Think Li Auto, think Xpeng, right? Even they do a couple of things for BYD as well. So very big company in terms of that. So nice to see this partnership. It really helps Tesla to get through those regulatory concerns, right? By partnering with a Chinese company. Now, further down in the article, adding FSD functionality in China is a big deal for the automaker, not just for the added incremental value, but also in terms of the competitive edge it gives Tesla against rivals like NIO, Li Auto, Xpeng, and even tech giants like Xiaomi, which is entering the auto market with semi-autonomous software of its own. Guys, the price war that's been happening, the EV boom and price war that's been happening in China is significant. If you take a look, usually Chinese products as a whole have a bad reputation, right, of not being on par with American standards or Western standards in terms of quality. That may have been true 15, 20 years ago now. But at this point, guys, Chinese products are very much on par with Western counterparts. If you have not seen the offerings of EV vehicles out of China, I highly suggest you watch a 5 to 10 minute YouTube video on the most popular EV car brands in China. Their models look very good, not only outside, but inside too. As a matter of fact, when you ask most Chinese people, because I do deep dive research like this sometimes, right? When you go on message boards, especially in Chinese WeChat groups, right? The consensus is that for them, Tesla is not up here. Tesla is actually down here. They're not happy with Tesla quality. And as a matter of fact, Chinese automakers deliver far substantial better quality at lower price points than Tesla. Tesla is actually viewed as kind of like just in the middle over there. As a matter of fact, yes, it has brand appeal because it's a Western car manufacturer, and usually foreign brands do well in China. But if you guys think that the Chinese consumer thinks that Tesla is the top tier EV, you are wrong. They're really not. Tesla is actually playing from behind right now. So let's take a further look into the article. What Tesla has to do is stay on the forefront of innovation. They have to be the most technologically advanced solution, China expert Leland Miller of China Beige Book said to Yahoo Finance. We have a domestic market that is saturated and a price war going on. Tesla needs to stay on top of the technological ladder. If they can do FSD in China, they would be the first company to offer full self-driving in China. That could be huge for them and could give them that spark that their brand has been lacking towards the Chinese consumer now in the past year or two. Tesla's lack of FSD in its cars is likely weighed on sales in China, where the latest tech features are prioritized. Right? Tesla's share of China market slid to 6.7% in Q4 of 2023 from 10.5% in the year prior, despite aggressive price cuts. As I was telling you guys, the Chinese consumer, right? They are not saying that Tesla is the best brand. It's not the one that they shop for the first, if anything, right? Nevertheless, gaining preliminary approval for FSD and a data deal with Baidu are two huge wins for Tesla. Very good for the company. That's what gave the company a 15% boost in the after hours, right? Is really if they're able to deploy their FSD on a large scale in China with the proof that they can do it, maybe that then gives them potential regulatory favors for approvals of using that software in other countries such as North America, right? And countries in Europe as well. So very big day for Tesla. Now, in terms of our technical analysis on Tesla, guys, looking very good. The bulls, the 100% engulfing daily move couldn't look any better than this right now on Tesla. So once this move tops out, right? We're getting a little bit overbought on the hourly time frame, a little bit overbought on the 4-hour time frame too, but it's Tesla. Tesla sometimes when it goes on these runs, you guys know what happens, right? It can really go on these runs. So the next line of defense for the bears, essentially, because it is still in weekly bear control at this point, and it is still in a monthly downtrend too. So your last area of resistance right now is coming up at about 200, 204. If ever we get rejected right there, we'll just be looking for a daily higher low. And when we're looking for the daily higher low, guys, we could be expecting the stock to come down into this area right here, 180, 178. Think of that pullback. That would be a gorgeous location to make an attempt at the daily trend change. If you want to take that trade, your entry would be around here. Your stop loss would be down below on these lows, and you would be looking for this to be the actual bottom of this cycle in Tesla and ride this up for the future. So gorgeous swing trade opportunity potentially presenting itself for Tesla. I may just be taking it myself, not with shares, maybe with leap call options, because now we're really in the bottoming process for Tesla stock in terms of the cyclical nature of their demand problems, and in terms of market investor sentiment overall. So that could be a very interesting trade. So just looking for that daily higher low to reset this daily uptrend. On the weekly looking very good as well. Weekly downtrend right now, 100% engulfing move. So same thing. If you want to reverse this into a weekly uptrend, we have to set the weekly higher low for the weekly trend change and then start attacking the higher end of this upwards trend, of this downtrending channel, right? Which is around the 220, 225 mark. So looking very good. Congratulations to all of the Tesla bulls for this amazing recovery, guys, in just 4 or 5 trading sessions from the lows. That is 40%. Absolutely amazing move off the bottom. Now moving on to Palantir. Palantir also looking very good, right? Daily uptrend set on Palantir right now. The area that we're looking out for, guys, is right above us at this time. I don't want to put too many boxes on the chart right now, but if you can see this right here, this is the area of congestion we're dealing with right now, right? So this whole 2320 down to about 2250, that's the area that the bulls are dealing with right now. However, we're almost through that area right now. So daily uptrend is now set, which means your weekly bounce is underway. Take a look at the size of this bounce. The size of the bounce is relatively decent, guys, in relation to our most recent lower high, right? You're talking about a bounce of roughly 50% so far, looking very good on Palantir. And we're also now above our daily short-term moving averages, which is good too. So as soon as this move tops out, looking for the daily higher low for further trend continuation to the upside, looking very good. If Palantir can come all the way up onto the $24 range, that'll create enough space to eventually even reverse this weekly time frame as well. Palantir only with earnings next Monday, so still about 5 trading sessions before Palantir reports. If ever, guys, we get another opportunity to get Palantir down here, $21 to $19, heavily going to play Palantir, just as I have been in the past month at this point. Looking very good. That we were always just looking for that monthly higher low for further trend continuation. Palantir, no red flags for the business. The business is moving, operating at all cylinders. And now, lastly, PayPal. So guys, PayPal. This is going to be an interesting one. PayPal with earnings tomorrow morning before the open. So obviously, guys, price action is going to be anybody's guess. But the one thing that PayPal did amazingly over the past 2 weeks, got the daily uptrend back, got the weekly looking very nice as well too. So take a look at this weekly uptrend we have going right now. Beautiful weekly uptrend, reacting nicely from our area of support. Now we're coming in to the level that we absolutely need to break, right? So earnings tomorrow can send this one of 2 ways. If we get a very bullish read on earnings tomorrow, guys, that will be the weekly uptrend break. It'll also be a confirmed monthly uptrend. If we can smash these highs at 68, confirmed monthly uptrend. You have not had, and keep in mind, The month of April, literally, the month of April is literally done tomorrow. So if they can close a monthly uptrend tomorrow, it will be your first monthly uptrend since all the way back here, guys, almost 3 years ago at this point. Would be significant for PayPal, and that could potentially take us up on our next leg up after that to around the $75 mark. So looking very good for the company. However, if they ever miss their earnings or their earnings are underwhelming, we could maybe expect a retest of this lower range right down here. Talking about 63 down to 61. Your moving averages can act as support as well. And then we have this beautiful big box of support area that is 63 down to 61. The expected move on PayPal earnings, off the top of my head, I don't remember it, even though I do have contracts for tomorrow. I think it's about 7-8%. All right, let's take a look right here. Yeah, about 8% to the downside. So you see 61.71 would bring us right down to this juicy area. Even if we come below it here, guys, would not mind getting exposure to this stock, right? Because this stock will, if my thoughts about this market and how this market will evolve over the course of this year are correct, I do believe that not only are the markets going to continue up for the rest of the year, but it's going to be a very big year of recovery stories for a lot of your beaten down stocks. Nike, Starbucks, PayPal, Alibaba, right? A lot of these stocks that just have not benefited from tremendous rallies over the past year. I do think that this is the year for them, and PayPal will not be left behind. So let's keep a key watch on what's going to happen with earnings tomorrow. I will do a brief recap of that on the channel. So that's pretty much everything I had for you guys in terms of our stocks for today. Now let's take a very brief look into my portfolio to see how I have positioned myself for all of these earnings coming up tomorrow. All right, guys, so taking a look at my positions that I have for just today and tomorrow potentially. So we do have the two SOFI plays that we wrote last Friday. They really haven't changed much. So I'm up a little bit on the $6.5 puts that I wrote last week. They're down to about 5 cents. We wrote them at 8 cents. I'll probably keep these for the week here, guys, right? SOFI, I really like the stock between 7 and 650 anyways. So I'm probably just going to hold these. Even if I do get assigned, I'm willing to ride these positions for some potential upside. I think that could be quite juicy. Same thing for the $7 puts, guys. You see, we wrote them all the way back down here around 780 last Friday, right? We came down into the $7 mark, and literally my position at the end of the day has not even changed. We wrote them last Friday for 20 cents, and they're paying 20 cents right now. I don't want to sacrifice this position, guys. This would give me an average cost on SOFI of $6.80 on these put contracts. I love that stock area, so I'm just going to hold these, right? I don't believe this is about $13,000 of exposure. I don't think it's enough to really take away my capacity to write more and more earnings plays over the course of the week. If it was like a Facebook or a Microsoft, you know, like $40,000, then definitely that one would take away a lot of my buying power, right? But for 13 grand, I'm just going to hold these SOFIs most likely for the rest of the week. Unless, of course, the stock rallies hard tomorrow or Wednesday and a lot of the premium comes out of these contracts, then I'll probably close them. But for now, very happy with these strikes and very happy with the premium I received. Now, in terms of PayPal, we have some puts for tomorrow, guys. The $58 puts for PayPal, we got 24 cents on them. They ran them up before the close on me. I wrote these at about 3:15, 3:30-ish for 24 cents. And right before the close, I was at the gym. They ran them up on me. So didn't get the most out of these that I could have, but very happy with my level. As you guys saw, right, the expected move for PayPal is right down here, 61.73, and I'm all the way down here at 58, right? Really at these lows right here, looking like a very good area. So we'll see what happens with PayPal, but very comfortable with these 3 put options. Now, in terms of our another earnings play, we did do some Logitech. So we wrote the Logitech 70s for the month of May. Unfortunately, there's no weekly contracts on Logitech, but just to give you guys a sense, an idea of why I chose that strike price right there. So you'll see the expected move on Logitech was pretty much, well, we can't see it for tomorrow. I can't see it on this platform, unfortunately, but it was about 5%, okay? So it was about 5%. And in terms of Logitech, right? So Logitech, the reason I went with 10% was it is twice the expected move, and the $70 strike would literally put me right down into this area right here. So think $70. That is the weekly 200-day moving average. It's also a very beautiful area of our previous confluence, right? That should be acting as support for the stock right there. So this whole pocket is what I was targeting, $70. We'll see what happens on earnings with them. Earnings actually comes out at 9 p.m. tonight, funny enough. So they haven't really released earnings just yet. We'll see what happens. Since it's a monthly contract, there may be a bit of premium that stays trapped in this in terms of time value. So if I can close this one for over 50% gain by tomorrow morning, I'll definitely be doing that. Then we also have some McDonald's 262.5 puts. So the expected move on McDonald's before the close, I'll let you know that right away. Expected move on just so you guys get an idea how I'm picking these strikes. The expected move was 3%. 265.43, right? So I wrote the 262.5s. It is not 2 times the expected move, but 260 for McDonald's, guys, is a very big level. If you want me to show you where that level is, guys, it is this level right here, right? So this is the 265 down to about the 260 level, okay? I wrote the 262.50s. You can see very big area of congestion in past price history. I am looking for the stock to maintain those levels. You can see it even best on the monthly here, guys. Just maybe looking for McDonald's to put in a monthly higher low for a potential monthly resumption of the uptrend. So looking very, very good. We'll see what happens on McDonald's tomorrow, right? But one thing's for sure, it's a stock that I love. Nothing wrong with the company per se. And I chose to write the 262.5s, and we got literally 69 cents in premium for those. Same thing, I went in a little bit too soon. I wrote these around 3:15, 3:30-ish, and we could have got more if we rated right before the close here. Premium usually always starts running up like 5 minutes before the close. Usually I do wait when I have the time to do it, but that's what we got for McDonald's. And now we did write some Meta. So this is a wheel play. So Meta 415s, they don't have earnings this week. I got $2.07, which is literally 0.5% on Meta. So Meta was already down 3% at the time that I wrote those puts. So top to bottom, if ever I'm assigned, guys, from the top of pretty much Friday, right? Meta's already down 3%. So for them to get to 415 by Friday, that would be almost 6.5% to the downside. I personally don't believe it. I don't believe that we'll be able to flush these lows. This 415 area is the earnings lows, right? The investors were bidding it up after, finding good value there. I expect much of the same. I do expect investors to step in. I would be hard pressed to see Meta closing below 415 this week. Anything can happen, of course. If Amazon is bad, Apple is bad, maybe it drags down the rest of big tech. But I really think there's good value in Meta down here at 415. That's why I wrote it. If I'm going to be assigned, I don't really matter. You can say, yes, it's a bit far off the support area. The next support area is indeed 380. But as I said earlier in the video, I don't think it gets down there, guys. So I'd be very happy if I'm assigned Meta down here. I'm expecting a full recovery in price here over the next month, month and a half. So looking very good on that position. Then we wrote some NXPIs for earnings as well. So NXPI, the 222.5s. NXPI, that was a win. So they had earnings after the bell here today. You can't see it on the chart right now. Sorry, let me put that on the chart. Let me just show you the earnings move right away. So extended trading hours. They were up about 4% in the after hours, up to 261. So looking good. The move on NXPI, essentially what it was is we got 59 cents for the 222.5s. Now, prior to earnings, the stock was at 247. So getting down to 225, guys, was about a 9% move to the downside, right? Or 222.5. All the way down there was going to be a move about 10% to the downside. And if you look at my expected move calculator right here, you will see that that was roughly pricing in pretty much half. Excuse me, let me just pull it up right now. Oh, is it broken or something like that? Give me a second. All right, here it is. So the expected move on NXPI was literally about 2%. Only 2-3% at that time. So I went with 10% to the downside, still gave some better. I don't think this is correct, by the way. I think it was actually 4.5%, 5%, because that's the time that I wrote twice the expected move. All in all, guys, all that to say, nice little previous support area down here in the 220 range. I was fairly comfortable with this. Semiconductors have been a very hot trade recently, and this stock is really one of the best companies in semiconductors in terms of their net profit margins and everything else like that. So looking very healthy, happy with that trade as well. Now, so that one tomorrow morning should be completely worthless. So that's a free $60 that we just got. Amazon, I actually closed this trade to free up some capital for tomorrow since Amazon does have earnings. I might be trying to get the 165s tomorrow, but this was a very juicy trade we did last week. So last week we wrote these Amazons for, let me just find it right here, $2.18. And we closed them today in the afternoon right over here. Let me find it right away. So we bought these for 93 cents. So we closed pretty much 60% profit, maybe even 70% profit. Didn't do the math yet, probably closer to 60%. Looking very good there on Amazon. I will be reopening this probably at a higher strike price, maybe the 165s tomorrow. I just closed this in order for me to be able to write some other positions without dipping into margin too much. So just really reallocating some capital there. I'll probably be back into Amazon for tomorrow's earnings. Domino's Pizza, that one played out very nicely today as well. So Domino's Pizza, we do have we had the 455s, which we closed for pretty much worthless. You can see that right here. Last week, we wrote the Domino's Pizza. Where are they? Too many orders, right, guys? So we wrote the Domino's Pizzas last Friday here at the close. Can I find them? I got about $1.50 for them. My apologies, guys. I should really do a better job of putting this all together for you. Anyways, we bought them back for about 5 cents. We got about, it was pretty much about $1.50 for them last week, $1.45 if I'm not mistaken. Where are these contracts? Why can't I find them for some reason? Let me just take a look here. Well, I guess they're just not there, guys. So my apologies for that. They're just not there. I can't find the contract, right? Maybe I'm just blind or something like that. Can't find the Domino's pizza, but you guys can watch Friday's video. We did get about $1.50 for that position, so I'm happy that one was closed at 95% profit. Then we did have a couple other ones that we closed today. The Tesla long puts that I had, closed those. Complete loss was, nothing you can do about that. Stock rallied 15% today. We got about $9 back on those, so I lost about $140 on those. I'll just remind you what we were going for on Tesla. We weren't bearish on Tesla. We were just looking for the daily higher low for further trend continuation. I was looking for that put to come into this area right here. That would have given me some nice gains on the puts, and then I was going to pivot to calls. Unfortunately, that didn't happen. Tesla just skyrocketed today. So you win some, you lose some. And then we did another strategy here today, guys. We did a couple more. So PayPal, we actually bought PayPal $75 calls. And the market makers kind of screwed me on this one. I put in a limit order at 90 cents and it was chilling. And then 5 minutes before the close, it just started going up and up and up and up. I had to pretty much buy it at the close for $1. So kind of disappointed that I didn't get the best price on these PayPal calls, but still nonetheless. So these calls, I'm making a bullish play on PayPal for next Friday for that $75 mark. If ever PayPal does well off of earnings tomorrow, I do believe that there's a good chance we can make some decent money on these. It didn't cost me too much, guys, and I'll explain why. Because we wrote these 358. So the number one thing that you should always try to do when you're making a long options play is try and make it free with something else. What I mean by that is this cost $100. What did I do to offset that $100? I wrote 3 puts at 58. It gave me about 25 cents each. That's $75. So in all reality, the net cost of PayPal exposure this week is only $25, right? $100 that it cost me, they gave me back 75, so it only cost me $25 to put on this call per se. So looking very juicy. We'll see what happens with that on PayPal tomorrow. And that's pretty much everything that I had for you guys in today's video for that portfolio update. Hope you guys appreciated it. And if you did, consider dropping a like on the channel. Would really appreciate it for the growth of the channel. Also, consider subscribing to the channel if you're new. We do these recaps every single Monday to Friday. And lastly, guys, if you have any questions at all on stocks, technical analysis, macroeconomic conditions, an options trade that you're potentially thinking about, just let me know and I'll be very happy to answer you down below in the comments. Usually answer you within the first 24 hours. So take care, guys. I will see you tomorrow. Happy trading and peace.